You've tried everything. You've back-tested strategies, bought the indicators, and watched every tutorial, but you're still losing money. You're starting to think you're the problem. What if I told you that you're right, but not in the way you think? The reason you lose money has nothing to do with your analysis, and everything to do with the invisible software running your mind. There is a tale of two traders, both starting on the same day, with the same capital, and even using the exact same trading strategy. The first trader, let's call him Leo, is a machine. Month after month, his equity curve climbs, a steady, almost boring upward slope. He is disciplined, focused, and strangely detached. When he takes a loss, he simply nods, makes a note in his journal, and moves on. When he has a winning streak, he doesn't celebrate. He simply follows his rules with the same robotic precision. He seems at peace. The second trader, Alex, is a whirlwind of emotion. He has spectacular months where he doubles his account, followed by devastating weeks where he gives it all back. He shouts at his screens. He gets euphoric, then despondent. He is a genius one day and a fool the next. His life is a roller coaster, and his trading account is the track. He is constantly on edge, living in a state of perpetual stress. What is the difference between them? It is not intelligence, it is not strategy, it is not market knowledge. The difference lies in the invisible architecture of their minds. Leo is running a different mental operating system. Over the next hours, we are going to do a complete teardown and reinstallation of that operating system. We will move from the chaotic, bug-ridden software of the amateur to the clean, powerful, and unshakable operating system of the professional. This is not a video on what to think. This is a masterclass on how to think. Volume 1. The diagnosis, the ghosts in your machine. Before we can build anew, we must understand what we're fighting. The human mind was not built for the trading environment. It was built for survival on the savannah. This fundamental mismatch creates what I call the four ghosts in the machine, the primal psychological programs that hijack your decision-making. Ghost 1. The caveman brain and the illusion of control. Our brains are prediction engines. In the ancient world, seeing a shape in the bushes and predicting lion kept you alive, even if it was just the wind 99 times out of 100. That one time it was a lion made the false positives worth it. The market is the ultimate bush. It is a chaotic system filled with random noise. But your caveman brain cannot accept randomness. It desperately seeks patterns, even where none exist. It creates narratives to explain every wiggle. It's the Fed. It's the algos. It's a stop hunt. This is the illusion of control. You feel smarter and safer, believing you understand the chaos. But this illusion is the root of the fear of being wrong. Your ego, your caveman brain, would rather have a false explanation than no explanation at all. It would rather be meaningfully wrong than accept random misfortune. The trading symptom, analysis paralysis, an inability to pull the trigger without 100% certainty, which never exists. Holding on to losing trades because admitting you're wrong means admitting you were never in control to begin with. Ghost 2. The scarcity mammoth and loss aversion. On the savannah, resources were scarce. Losing your food or your shelter could mean death. Our brains therefore evolved a powerful asymmetric bias, loss aversion. The pain of losing $100 is psychologically about twice as powerful as the pleasure of gaining $100. In trading, this is catastrophic. It makes us risk-averse when we should be bold, and reckless when we should be cautious. We cut our winners short to lock in gains and avoid the pain of seeing them reverse. We let our losers run, avoiding the pain of realizing the loss, even as it grows larger. The trading symptom. A consistently negative risk-reward ratio, small frequent profits, and occasional catastrophic losses. The boom and bust cycle is driven by this ghost. Ghost 3. The tribal scout and FOMO. For our ancestors, being separated from the tribe was a death sentence. Missing out on a group hunt or a safe location was terrifying. This created a deep-seated fear of missing out. In the modern world, the tribe is other traders. When you see everyone on Twitter boasting about their gains, your tribal scout panics. The tribe is feasting without me. This triggers impulsive, chasey trades. You abandon your plan and jump into a move that has already happened, often buying the top or selling the bottom. The trading symptom, chasing price, entering trades without a plan because everyone is doing it, overtrading, a feeling of panic when you're not in a position, Ghost 4, the hoarding squirrel, and the endless harvest. When our ancestors found a berry bush, the instinct was to eat every last berry. You didn't know when you'd find the next one. This is the scarcity mindset applied to opportunity. In trading, this manifests as the fear of leaving money on the table. You have a winning trade, but instead of sticking to your profit-taking plan, you hold on for more and more. You try to squeeze every last pip from the move, turning a solid winner into a break-even or a loser as the market reverses. You see the market as a finite berry bush, and you must harvest it all, now. The trading symptom, inability to stick to profit targets, turning winners into losers, never being satisfied with a good trade. These four ghosts are not personal failures, they are universal human conditions. The amateur is unaware of them, a puppet on a string. The professional has learned to see the strings. Volume 2, The Foundation, the cornerstones of an unshakable mind. Building a new operating system requires a new foundation. We cannot simply try to think positive. We must lay down 4 philosophical cornerstones that are immune to the ghosts. Cornerstone 1, Radical Responsibility, the Stoics' anchor. This is the first and most non-negotiable cornerstone. It is the decision that everything in your trading results, every loss, every missed opportunity, every mistake is a direct and sole consequence of your own choices. The market is neutral. It is a mirror. It reflects back the quality of your psychology. When you blame the market, your broker, or unlucky news, you are refusing to look in the mirror. You are giving your power away. The practice. After every trade, especially the losers, you must state aloud, I created this result. Not the market did this to me. I created it. I chose the entry. I chose the stop. I chose to hesitate. This is not about self-flagellation. It is about empowerment. If you are responsible for the problem, you are also responsible for the solution. Cornerstone 2, the probabilistic mindset, the casino owner's creed. The amateur thinks in terms of certainty. This trade will win. The professional thinks in terms of probability. This trade has a 60% probability of reaching my target based on my edge. A casino owner does not know if the next spin of the roulette wheel will be red or black. They don't care. They know that over 10,000 spins, the probability of the house winning is 52.7%. That is all that matters. You must become the casino owner of your own trading. Your trading plan is your house edge. Your job is not to win every trade. Your job is to execute your edge consistently over a large sample size of trades. A losing trade is not a failure. It is the necessary 47.3% of spins that lose. It is part of the statistical expectation. The practice. Reframe your self-talk. Stop saying, I hope this wins. Start saying, I am executing my edge. The outcome is uncertain, but the probabilities are in my favor over time. Cornerstone 3, process over outcome, the architect's blueprint. The amateur is obsessed with the outcome, the profit or loss. The professional is obsessed with the process, the quality of their execution. Imagine 2 architects. One is constantly checking the real estate value of the building while it's under construction. The other is focused solely on ensuring the foundation is poured correctly, the steel beams are level, the wiring is to code. Which one will build a better building? The P&L is the real estate value. It is a lagging indicator. The process, your preparation, your entry, your risk management, your journaling is the construction. It is the leading indicator of future success. The practice, your only measure of a good day, should be, did I follow my process perfectly? If you followed your process and lost money, it was a successful day. If you broke your process and made money, it was a failure. This is the ultimate litmus test. Cornerstone 4, non-attachment, the Zen Archer's focus. This is the culmination of the first 3. It is the ability to be fully committed to your trade, yet completely detached from its outcome. A Zen Archer focuses entirely on the process, the feel of the bow, the alignment of the arrow, the breath, the release. He does not focus on the target. He knows that a perfect process will naturally result in the arrow hitting the target. If a gust of wind moves the arrow, he does not despair. He simply knocks another arrow and begins the process again. The practice, the "it's just a trade" mantra. Before and after every trade, remind yourself, this is just one trade in a long series of thousands. Its outcome does not define me. I am committed to my process and I am detached from the result. Volume 3, the framework, building your personal trading constitution. A mind without a structure is a playground for the ghosts. We must build a fortress of rules, a written, unbreakable constitution for your trading business. This is not a vague idea, it is a physical document. Article 1, the definition of your edge. You cannot trade an edge you cannot define. Your edge is the specific, repeatable market condition that gives you a statistical advantage. It must be so clear that a 10-year-old could identify it. Example, my edge is a pullback to the 50-day exponential moving average on the daily chart of a stock in a long-term uptrend, confirmed by RSI, bouncing from the 40 level on above average volume. Non-example, I buy when it feels like it's going up. The writing exercise. Write down your edge in one paragraph. If you cannot, you do not have an edge and you should not be trading real money. Article 2, the laws of entry and exit. This article removes all ambiguity from your execution. It turns you from a deliberating human into an executing machine. Entry laws. The exact conditions that must be met for you to enter a trade. Every condition is a "and" statement, not an "or." Exit laws. The stop-loss law. The precise, unchangeable price level or condition that tells you the trade is invalid. This is based on market structure, not on a dollar amount you're willing to lose. The profit-taking law. Your exact plan for taking profits. Do you take all at once, scale out, use a trailing stop? Define it mechanically. Article 3, the Risk Management Protocol. This is the most important article in your constitution. It is the force field that protects you from yourself. The 1% rule. You will never, under any circumstances, risk more than 1% of your total trading capital on a single trade. The maximum drawdown rule. If your account draws down by X% from its peak equity, example 10%, you will stop trading for the month and only paper trade until you identify the flaw in your process. The position sizing formula. The exact calculation you use to determine how many shares or contracts to trade based on your stop-loss distance and your 1% risk. Article 4, the Journaling and Review Protocol. Your trading journal is not a diary. It is a laboratory logbook. It exists for data collection and process analysis. The trade log, a spreadsheet with cold, hard data, entry, stop, exit, P and L, R multiple, reason for entry, reason for exit. The process scorecard. After every trade, you give yourself a grade, A to F, on your execution. Did you follow your constitution? This score is more important than the P and L. The weekly council meeting. Once a week, you review your journal and your scorecard. You are the CEO of your trading business, auditing its performance. You look for patterns in your behavior, not your P and L. Volume 4, the Daily Rituals, Forging Discipline in the Mundane. Discipline is not something you find in the moment. It is a pre-built structure of habits and rituals. These are the daily practices that wire the new operating system into your subconscious. The morning launch sequence, pre-market, your trading day does not begin when the market opens. It begins with a 30-minute ritual that sets your state. Mental decluttering, 10 minutes, mindfulness meditation or deep breathing. The goal is to quiet the internal chatter and create space for objective observation. Constitutional review, 10 minutes. Read your trading constitution aloud. Remind yourself of your laws. This is your pre-flight checklist. Market analysis and planning, 10 minutes. Analyze the broader market. Identify key support and resistance. Set your alerts based on your edge. Do not look for trades. Let the alerts come to you. The in-the-moment anchors during market hours. These are micro rituals to perform when you feel the ghosts stirring. The pre-trade pause. Before clicking buy or sell, take one deep breath and ask, does this trade violate any article of my constitution? If the answer is yes, you are forbidden from taking it. The post-loss ritual. After a stopped-out trade, immediately stand up and stretch. Say aloud, the trade is closed. The loss is accepted. I am following my process. This creates a psychological full stop. The euphoria check. After a big win, do 5 push-ups. The physical exertion burns off the addictive dopamine and brings you back to a grounded state. The evening shutdown sequence, post-market. This ritual closes the loop and prepares you for the next day. The data entry, 5 minutes. Faithfully log every trade in your journal. No exceptions. The process grading, 5 minutes. Give yourself your execution score for the day. The mental release, 5 minutes. Consciously declare your trading day over. My work here is done. This prevents you from obsessively checking charts overnight. Volume 5. The Alchemy of Failure, Transforming Losses into Fuel. The final and most advanced skill of the unshakable trader is the art of alchemy, turning the lead of failure into the gold of wisdom. Most traders are crushed by their losses. The professional is refined by them. The post-mortem analysis. When you have a losing trade or a series of losers, you conduct a formal post-mortem. This is not an emotional inquest, it is a forensic investigation. You ask 3 questions in this order. The mechanical question, was my analysis wrong? Did I misread the chart? This is about your technical skill. The psychological question, did I break my rules? Did I move my stop, size up too big, or chase a trade? This is about your discipline. The systemic question, is my edge broken? Has market regime changed, rendering my strategy ineffective? This is about your process. 90% of the time, the problem will be in question 2, psychology. The solution is not a new strategy, it is a deeper commitment to your constitution. The loss debriefing technique. For losses that sting particularly badly, use this powerful writing exercise. Write down the answers to these prompts. The story I am telling myself about this loss is. The specific emotion I am feeling is. This loss is showing me a weakness in my mental game, which is. One specific action I will take to strengthen that weakness is. This technique externalizes the emotion and transforms it into a concrete, actionable insight. The unshakable identity. This journey is not about becoming a profitable trader. It is about becoming a specific type of person, a person of discipline, focus, and emotional mastery. The profitable trading is simply a side effect. The amateur identifies as someone who trades. Their self-worth is tied to their P and L. A winning trade makes them feel like a genius. A losing trade makes them feel like a failure. The professional identifies as a trader. It is a statement of being, not doing. A trader is defined by their process, their discipline, their respect for risk. The outcome of any single trade is irrelevant to their identity. They are like a lighthouse. The storms of the market rage around them, but their internal light remains steady and unwavering. You now have the blueprint. You have diagnosed the ghosts. You have laid the cornerstones. You have written your constitution. You have your daily rituals. The rest is practice. The rest is repetition. The rest is the daily, humble work of showing up and executing, not when it's easy, but especially when it's hard. Go forth and build your fortress. Go forth and become unshakable.